Hey, what's up, everyone? Welcome back to the Traders podcast. In today's topic, we're going to talk about risk and risk management and everything about risk. So, I'm your wonderful, exciting host, CK, alongside my other co-hosts, Ken and Tara. So, yeah, guys, what's up, everyone? How are you guys doing?
You're good. Giving thanks for life. Good morning. Though we are late, I hope we can be able to deliver the content we had planned for today. Yeah. Anyway, Ken,
what's up?
Oh, hi guys. Hope you're doing well. I'm having a wonderful time. I'm ready to share with you what I think about risk. Risk is very, very important in trading. Risk 101. What's risk? How to manage it? Strategies. That's what is in this podcast. So sit back and enjoy. I think we can start there. Should I start?
Yeah. Start. Before start, I know people are listening. We don't yet have
no market update.
Intro. We're working on an intro. So for people who have been asking, shout out. Before we start, I'd like to give a shout out to some few people. So we've been seeing lots of you guys following us on YouTube. So just give me a sec. I give a shout out to a few people who comment on our videos, our podcast videos. We see you guys enjoying them. Enjoy. First, I'll give a shout out to some two friends of ours who visited us in the office yesterday. That's Eugene and Justin. So good guys came to the office yesterday. They've been listening to the podcast, following a lot. On the comments, I can see a few interesting people. There's some guy called Flame. There's some guy called Nivael Moura. Reality of Trading, love it. Shout out to you. Infinite, I think that's a phone, so I don't know who you are. Beryl Mbone, shout out to you. We see you. She says this was very informative, picked up on life skills too. So not just trading, we talk about everything here at the Traders Podcast. This is very necessary to have in Kenya. This is someone else. This is Real Rich. So shout out to you. Rukwaro Solomon, you guys are a force. Love your work and happy to have been your student at Financial Hub. So Rukwaro is one of our students, so shout out to you. And yeah, that's from the first video. So I'll give shout outs to other people on other comments, other videos later on. That's not the topic for today. Today we're going to talk about risk. So what is risk, Ken, Taras? What's risk? Risk on, risk off. Are you risk on, risk off?
Risk on one trade. Risk off for the week. Okay, I've had a couple of trades, but just one trade running.
Mm-hmm.
Yeah, so risk on.
Risk on.
Yeah.
Ken, risk on, risk off.
Risk off.
Risk off. Why you risk off? What's risk? What are we talking about?
I think it's important to start with the markets update first of all before jumping into risk.
No rush.
Gold trading at 1880, down 0.5%.
Why do you give market updates, by the way?
We need to know where the markets are trading. We must always be aware of where markets are trading.
That's our job.
Cool.
That's our job. Or you'll have no job to be on. Anyway, oil 69.87. Oil has actually made new highs, trading as high as 70.50 a barrel, coming back from zero last year. In less than 1 year, 6 months, we've seen oil rebounding back to $70 a barrel. The Dow trading at 34,450 for a whole week. We've seen a consolidation, sideways movement. Euro yen 133.20, pound 1.4087. The Nasdaq down 0.3%, 13,778 is the price. VIX up up a percentage, trading at 18.03. The dollar has been quite strong, trading at 90.22. Aussie dollar, Caleb's favorite pair, 0.7734, up 0.03.
That pair never moves.
Ripple, back into cryptos. Bitcoin 36,911, Ethereum 2,500.
Percentages.
Bitcoin is up 1.4, Ethereum is down 2.3. The pound against the yen is trading at 154.30, down 0.31. Back into the crypto world, I don't think there's any other update. In the stocks, we can look at Tesla trading at 598.78. I can look at There's this company that I wanted to talk about, Amazon trading at 3,281. The DAX trading at 15,533. US 500, S&P 500, that's the benchmark of the market, trading at 4,215, down 0.2%. Anyway, guys, that's the market update. I think it's important for us to now go into risk. And I will start off with risk. I think risk is something very, very important to me.
What is risk? What is risk? What is risk, Ken? What is
From
risk?
my perspective, I view risk as it's a double-edged sword. But anyway, defining risk, I think, is the probabilities of more things happening than one can imagine. So if you know what will happen, there's no risk. But the fact that you don't know what is likely to happen means there's some risk. So for me, risk comes from the element of more things happening than I have imagined or I have been able to thought of, to
More
think
things
of,
happening than you
Exactly.
can imagine.
More things happening than I've sat down and really thought hard about. Anyway, that's one definition I can use, or that's my perspective on risk. Another one that I can use, I think, is just what's this commonly used by many people. It's the probability of loss. But I hate that because it's also the probability that you can gain. So it's not only losing. I don't think risk comes only from losing. As much as you may be making money, there's still some risk involved in that. So that's my perspective on it. But anyway, that's my definition of risk. First of all, I think I'd be able to classify risk into, this is how I view risk. There are two kinds of risks for me. So there are risks that must be taken for you to thrive. I think there are such risks, you can't avoid them. And there are risks that must be avoided for you to survive. Knowing the difference between the two is being a perfect or a good risk manager.
Yeah, good.
I think I can throw the ball to you guys to keep moving from there.
Risk manager. Tell us what's up.
So, for me, basically, I think risk is the layman part of risk, and there's the risk in trading. So, for the layman part of risk is basically the probability of, as Kenneth said, danger, harm, or loss happening, or something you're not expected due to uncertainty of life. So, for me, I believe, first of all, life is a risky endeavor. Like, from just birth, life is risky. There's a lot of things we do.
You're already exposed.
Yeah, you're already
Living is
exposed.
risky.
Yeah, living is risky. Like the moment you are born, you're exposed to a lot of danger. Diseases, even just simple things like driving. Driving is very risky. That's why, like, there's a speed governor, there's seat belts, you see.
Yep.
Yeah, like flying from here to US, bro, that shit is risky. You are about, is it 40,000 feet above sea level or something? Yeah,
And which one is more risky, driving a car or flying?
it's subjective.
No.
No.
It is not.
it's
There's
not
research done.
Okay, yeah, of course, flying is riskier.
No.
Why?
Okay, why?
Because of the danger. The impact of the danger is more than the impact of the danger of driving. Like, okay, in driving you can easily survive than in a plane crash.
But which one is riskier? That's your perspective on the riskier one?
For
Caleb,
me,
why is he wrong?
Because, okay, according to research,
Yeah.
the more per year, the more deaths in a car crash than in an airplane.
Yep.
So airplanes, they've tried to reduce the amount of risk. That's why you'll easily see people traveling all throughout the year, but no one has died.
Yep.
But in car crash, there's no single day that we miss a car crash.
Yep.
So the risk on the road
It's higher.
is higher than up there.
Yep.
yeah, true.
So yeah, that's why I think, according to
you see.
research.
Yeah, so okay, basically, I think it's.
But you see, now me, I'm not talking about now impact of death. Yes,
Oh, yeah,
in a
the
plane,
impact. Because actually, risk now comes from now. Okay, like if you now put the risk aspect of trading, now that's volatility. You see, there's volatility and there's risk. Risk now comes from like you're literally out of the markets, 100% out. So like that's death. Like so for me, I was viewing it as which one can cause more death.
death.
Yeah. So
The road still causes more death.
okay, more death.
Exactly.
More death. Yeah, more death.
more debt.
Yeah, but
Anyway, yeah, continue.
yeah. So
Yeah.
from coming into trading basically is risk is the probability of your investments going not
South.
not delivering not going south, but not delivering the expected returns, or actually giving a loss, or an entire loss of your investments. Yeah, so for me that brings in risks into trading. But for you to also make money in investments, you have to heavily put in risk into your personality. Like you have to take risks for you to make money in investments. So
Thrive.
yeah, as Ken has said, risk also, for you to get returns, you also have to have some risks. Yeah, so I think we will go building up on that.
Cool. So Taras is ahead of risk at Financial Hub. So if you come for any of our courses, he's the one who takes you through that. In our course content, he's the one who's in charge of that. Yeah, but we all go through risk.
And in charge of you guys.
And in charge of the students. Make sure you manage proper risk. So yeah, risk, same thing what the boys have said. I agree with them. Probability of losing money. So now understanding risk in that perspective, it's up to us to be, we keep saying, or even most traders keep saying, we are risk managers first before we are traders.
Yeah.
So you have to manage risk. Know how much money
your
you
main
have.
job is to manage risk.
Exactly.
Yeah.
Your main job is to manage risk, not to try and be right or wrong. This is not competition.
Yeah.
Manage risk. As Kenna said, you need some in order to survive. Yeah, the risk you take in order to survive.
Yeah.
Oh no, you avoid.
Oh,
to
risk,
survive.
yes, risk
You avoid.
to avoid risk. Avoided in order to survive, and risk taken in order
To thrive.
to thrive.
Yeah.
So yeah. So let's kick it off. Let's get in.
So first of all, as a risk manager, I think I have come to understand that a lot of people, both professionals and beginners, intermediate people, have very very little understanding of risk. And I think it's one of the most important topics that a student, a trader, beginning trading needs to learn before even learning other things. Like, I think technicals should come after risk. So, but it can't work that way. Also, like how people come into trading, like risk is what like gives them that like reality check. You see, like blowing accounts, not making progress on your accounts. So you come and realize that there's something I'm doing in my trading that is making my trading go wrong, and that comes now from bad trading behaviors. So they bring in the element of losses. So basically, risk is to minimize losses and have control losses, because in trading you can't avoid losses. So basically, the main reason we have risk management in trading is to control those losses and also like minimize them, because you can't just have 10 losses in a row and you're still trading, 30 losses in a row and you're still trading. You see, you need to have a point where you put a stop and reflect back on your trading, your mistakes, your strategy, maybe your system. So I think that understanding of like someone that you need to take time to develop a risk management framework for your own strategy, for your own self, for your own personality, because also people are different. Like I think also in the team, me, you, and Ken, we're all different in terms of risk appetite. So it all comes down to taking time to develop a full trading system. So like risk management is just one part of your trading system. So if you don't develop that well also, maybe you can be having a very, very good psychological mental framework, but a very, very good system, trading system strategy, I mean, maybe technicals or fundamentals. But if you don't take focus on risk, your whole trading will still tumble. So like it's the foundation of your trading. Like you have to have a very good understanding of risk. Yeah.
Okay, cool. Because as we get even deep into that, we've talked about risk being the probability of losing money or risk of ruin, like blowing an account.
Yeah.
So I think it's important to tell guys a few incidents you guys have had, maybe near close ruins.
Yeah, exactly.
Or big losses. Ken holding a trade for a month, not accepting the loss.
Me, I think I already talked about my oil catastrophe.
Last time, yeah.
Yeah.
And there are much more.
Yeah.
Ken, which endeavor were you at most risk and you weren't accepting that risk?
When I think about it, I think first I'd classify risks into categories. So
Two
Pardon?
categories.
no, into categories.
Oh, into okay,
categories.
cool.
So when you're first starting out in trading, I think the first risk that you have is you don't have a system that is working, or you don't even understand how markets are working.
So that's a risk
Yeah.
That's a risk
of not understanding.
of not understanding. Like you
Cool.
don't understand how you should make money in the markets. That's one kind of risk that I think
Mhm,
most people actually go through.
Mm.
But as you evolve in the game, the risks that you're tackling or the risks that you're taking in the markets keep changing, or they're dynamic. So I'd say risk is dynamic in the market in that it keeps changing. Again, if you think about an intermediate or a professional trader, there is the risk that the market conditions will change and your system won't work. That's another kind of risk. You get
The what will change?
the market conditions.
Mm.
You find that your system probably is a trend following system, and the markets all of a sudden turn into a ranging year. Now there's a risk that your system won't work, or rather it won't work. That's a risk. How have you exactly? To first start off, before I even go into the point that you're asking, I think it's important to say, like Lawi said, most traders don't think hard about the risks that they're taking in the market.
Mm-hmm.
If people thought hard about the risks that they're taking in the market, no one will start trading without understanding what they're doing. I don't think anyone who really thinks hard about what trading entails will start trading without knowing, without thinking hard about how to navigate that jungle, because it's a jungle and it needs a very, very good mental map for you to survive. So first of all, before you start trading, it's important to sit down and think about the risks involved. If you understand that, then you can come up with a better mental map which will guide you in your decision making. But anyway, going into your question, you are asking what are some of the incidents in my trading where I think I've been
real life
exposed.
examples.
Exactly. First of all, I think there's this psychological risk of holding a trade for too long, or human nature coming into your trading. Personally, I remember the first time, it was not my first account, it was the second account. I've never blown an account 100%. That has never happened to me. But I've lost, the worst drawdown that I had was about 65-70%, and it's the scenario that I'm going to describe. Unfortunately, it was not caused by overposition sizing. I have gone into drawdowns because of overposition sizing, but this one was not caused by overposition sizing. This one was caused by an error of human nature, holding a position for a longer period, or holding a position without a plan. What happened to Lawi, I think, with the oil scenario? So I had a euro yen position, executed a position, and I think at some point the trade was working very, very well, moving to my side, but didn't move to my target. And market,
target
exactly,
against you.
yeah, and markets reversed and started moving higher. So they started moving against me. I had a euro yen short position, I remember clearly.
Yeah, I remember. Oh, in the house.
I can't remember. I can't
you
remember
were in the
where I know I held a position in the house because we were trading in the house back then, but I can't remember where exactly. But I feel like it was still in the house.
Yeah, it was in the house. Yeah.
It wasn't
It was
last
not in
year.
2019. I think it was in 2018. Yeah.
18, okay.
So I executed a euro yen short position, and that was exactly the bottom of the markets. Markets never traded that low ever
You
again.
did what you sold.
I sold. So I expected markets to move lower. We had about a 50 pip move to my side, and then markets bottomed and started moving higher. The worst mistake I did was move my stop loss. So it started with, you know what, probably I'm right. So there's the risk that this market is wrong and I'm right. I decided to think that probably I'm right. So I entered into a loss trap. So I kept moving my stop. And for a whole month, the markets were moving against me. And this was a strong bull market.
And every day you're moving a stop.
No, at some point, I just decided I
To
would
remove
have a
it.
stop. Yeah, so
So you
at some
removed it
point,
eventually.
yeah, I decided now for this scenario, I think it's more important for me to think of how I'm going to make back my money. The worst mistake I did was, instead of just holding, if I held that position without adding into losers, I'd lose like about 30% of my account all the way to that point where I exited the positions. But the mistake I did was averaging losers. So as the markets were moving against me, I kept on adding into the position. I kept on adding. At some point, there was a position I added that worked really, really well. And I think I went back into break even.
That's when you call Mr. Goldman.
Exactly. Caleb was telling me how good I am at this game. How professional I am.
Averaging his losses and
Averaging our losses and making money. Anyway. And then I did the worst thing again. I refused to exit at that point still. So instead of exiting, I decided to try and make a profit.
A big profit. More than you had to make at first.
More than I had anticipated. And then markets reversed again. And I was in the red. So I ended up losing about $350 out of about $550.
It wasn't all of it?
Yeah, it wasn't all of it. I had some money remaining, which I decided to withdraw and stop trading. So when you go through such an experience of holding a position for a whole month and you're losing, you decide to take a break from trading and think hard about whether this is a game you should be playing with your life.
This is the time you left the money we went to cost.
Yeah, so I decided to just withdraw the cash and leave to cost. That's one. I think that's one of the catastrophic ones. That's the worst that I've seen. The other one that I think I could point out to was much more of a combination of things. And like the first one, it was not one mistake. And that's the danger in trading. There's so many mistakes that you can make while you're trading, such that for you to map out and avoid making all these mistakes, you need to be very, very systematic and very, very rule-oriented. Like it's very hard to play in the game of trading without having a structure of how you're going to do things. Anyway, so the second position, the second scenario where I had where was a combination of markets not working like I expected or my system being out of tune with the markets, and markets are moving heavily against me, and I was trying to bet on contrarian trades. So I was trying to go into the direction of to bet against the trend. And markets were trending strongly, and I kept on betting heavily with the goal of trying to make back my money. Oil. So I've lost money on oil trying to short oil in this bull market recently had.
After going to zero?
After going to zero. I think for a very long time I had the wrong scenario of how markets rebound. I knew oil will rebound, but one thing I've learned now is when markets are out of value, like when markets are to the extremes, they go back very fast to the normal valuations. That's why you see value investors always pointing out that it's very hard for markets to stay out of efficiency. Because if you look at the efficient market hypothesis, they normally point out that markets are normally efficient and it's very hard for you to make money. But from our trading, we know a market is not efficient if it can go to zero. A market is not efficient if you can have 5,000 in the NASDAQ back in 2000. Those were cases of inefficiencies. But during such cases, it's very, very wrong to assume that markets will trend back slowly in a slow pace to the normal variation. So markets will really, really move fast to levels. After extreme levels, markets come back very fast. That is the lesson I picked up. And I don't think I'll ever make that mistake again in my trading. If markets are out of proportion, I won't try to catch the top. That's another mistake.
So Taras tried to catch the bottom. Yeah. You tried to catch the top. All angles.
Exactly. So that's one thing that I think I'd point out to start off. Like if markets are, because markets will often move out of efficiency. Like we'll have inefficient cases of markets, and if that's the case, I think the move back to normality or the move back to the norm, to equilibrium is very, very fast.
Back to fair value.
Back to fair value, exactly. Very, very fast.
Yes.
So you need to be very keen on such setups. And I think understanding market conditions, but we'll move into that some other time.
Market conditions.
Yep.
Some other time in this podcast or another?
This podcast.
Okay.
Yep.
Caleb.
Caleb has never blown an account.
Ken has blown one of my accounts.
So you are trading the account. I was not making decisions. I was just helping you make decisions. So the blame is now on me.
It was up. No, okay, it's not. I can't blame on you. No, I can't blame you. Anyway, it was one of those points where you've analyzed the markets. Too much analysis paralysis. You've been losing money. Then Ken was like, so take this trade. Me, I'm like, Ken, bring that phone. It was on gold, Cindy. Remember? It was a small account.
Yeah.
Ilikuwa account it wasn't even a big
$5.
dent. 45.
I only helped
small.
Caleb execute the position.
Just
He was struggling with execution, so I helped you with that.
We've talked about that. Too much analysis paralysis. You're jumping from one strategy to another, so now you get stuck. Anyway, me, I'm quite like we've been saying quite some time. I'm a bit conservative and I'm very disciplined. So I've never gotten. I don't remember any trade I've gotten into a loss trap.
Yeah.
I've
Thank
never
God.
like
Thank God.
I've taken a trade and
I've
move
never-
or remove stop loss. There was a time I was about, you remember? There was a time I was about to remove the stop loss. Then
What
you two
happened?
guys were like, it was what trade? It was GU, I think, last year.
in the office.
Yeah, in the office.
Yeah, I remember.
You remember?
Yeah.
I
There was a
don't
time.
remember that.
I remember.
Come on, you can remember.
And that trade, if you had removed that stop,
I swear,
my friend.
It was GU.
And I was long. I was long in those
Remember?
positions.
It was
that time you were
it was
trying to short.
ranging. Yeah, we had, I think, different trades.
I remember.
It was
yeah.
ranging
There was
for a
time we
bit,
had
then
different
it
trades.
broke up out to the upside.
Then came back.
Then quickly came back down. Then it was like, I turned to a
I
stop
think
loss.
I
Then you guys were like, what? Because last year I lost a lot. Like the way Ken was losing money last year on US oil, trying to catch a top. Me was losing money on GU.
Yeah.
Mhm.
I
So
lost.
you've done the same mistake. Like
So-
you've-
But man, I kept getting in. So I wasn't moving stop loss, but I was fighting like psychologically.
for
I
my
wasn't
second scenario, it was the same case. Like just executing and
that oil one, yeah.
exactly. Yeah.
So I was getting into that. So I wasn't accepting that, and the market was moving in an uptrend. So I don't know. I'm a trend follower that time. That's the time I incorporated pivots.
Yeah, uko na ma- three.
I was like, let me play around with pivots. I think August I had the biggest loss last year. I don't know what percentage
But
it
it's
came.
system hopping.
Yeah,
system
system hopping
hopping.
or system drifting. I don't know what percentage I lost, but last year August, now
4, 5.
I think about 6%
Oh.
on that GU,
Mm.
and now fighting with others. But anyway, there's a lot of reflection done on that one. So I think that's any other trade. The ones you started with at first, the Euro USD took on the gap. That one just went straight to loss.
Yeah. And you lost big.
Yeah. Apart from that, I'm not gotten into any loss trap. I take like what Ken and Taras are saying. We'll talk about the different risk, but now there's a psychological risk, and I think what really affects psychological risk is the amount size you put on a trade.
Yeah.
Position size.
Position sizing.
Yeah, position.
So if you take a big position, you'll be really confused. Like I've risked 2% or 5% or
But
10.
2% is not as big if
Yeah,
you're
2 is
quite
not big.
systematic.
If you take, let's say 5.
Yeah.
5, you've gone. You're risking a
yeah,
lot.
that's a lot.
You've gone all the way to 5 and you're risking 5, and you take that, you'll be stuck on the markets. Like you just want to watch. So I've never really broken those rules. I'm conservative. I'm disciplined
Yeah, continue being like that.
to a gym. So tumezoea mentally. We're used
Okay,
to
that's
it.
nice.
So maybe Taras.
Hey, me, I've had a blown oil. I've talked about it. It was
Kidogo.
horrific. It was terrific. It was. Yeah, then you know,
Touching a bottom.
Like, yeah, it's that thing. Like, it's a form of risk. Like you've never seen it before. You see, like you think it has never happened, so it'll never go to zero.
It's
Oil,
impossible.
yeah. I will. Had a pin at $18, then came back to about 26, 27. Me, I got that entry. I was like, yes, you're taking it to 70.
And now it's at 7.
Hey.
And your account is out.
Yeah. You know, markets, and that time also it was form of grandiosity. You see, like that previous month, I had my best month in trading. It was 384% return in a month. That was, I think none of us has had that form of return here. 384% in a
There's
month.
one Ken had 300, yeah?
That was a whole account. That was a month.
In a month.
Yeah, for
Ken
March
also,
March 2020.
was yours a month? It wasn't a month?
No, mine
Okay.
was not
Yeah,
yet.
March
so yours-
2020. Yeah, so
Okay, yeah.
then
324.
384.
84.
But that's if you talk about it from that perspective, I think it's important to also remember the factor of risk-adjusted returns.
Exactly. So that's why I'll come into that point. So you have a very small account under $1,000. You're taking too much risks for you to make $500, $300 in a week. You see. So at that point, I think it was just the fact that markets were working so well for me for so many trades So I thought like, now,
Grandiose.
yeah, I'm the king of the markets. I can now take high risks, put more
Decided
trades.
to throw your trading plan out of the window.
Yeah, man. And I had a very solid, strong trading plan, man. And I just throw it like in. Then like see at him to throw akitake the trade psychologically sasa hiyo kumove stop acha nitoe stop kwanza so such stuff like just a small mistake takes you to the grave. So where was I I had lost about was it about $600-$700 on that on that scenario, and it was too fast that I didn't even get to learn a lot. You see,
did you have any change like some money left in the account? Like Ken, he's
I think
abra njugu
$5.
Yeah, okay, I don't think because I don't think so.
Too fast,
it was too fast. Yeah, the move was too fast. So from that point is when now like the reality of trading now hit me so well that in as much as you can have a good system, just risk management is the pillar to survival in trading. And like there is no limit to how much you can blow in trading. My $500 was I appreciate it so much. It was a very, very small amount of money to teach me such lessons, you see, because
it was worth it.
It was worth it. Do you remember the story of Bill Huang, the guy who lost 20 billion in 2 days? I lost $500. That guy lost $20 billion in 2 days, bro. Like that lesson, and that's a pro working for a bank. See, so like there is no limit to how much you can lose in trading. So it all comes down to, as Caleb has said, being disciplined to follow simple rules, to follow simple ground rules of trading, of risk management, and you'll survive in the markets. Because in trading, you can't make money within the first 5 years. So at least try and survive within those 5 years for you to at least now thrive after the 5 years. So.
And before we go deeper, like Ken, what you had mentioned, just taking it for the people who are not really forex traders and all. So you said 2 aspects of trading. I mean, risk, probability of loss. Yeah, that's really when it comes to trading. And the other one you said,
more things happening than you can imagine.
Does that now, in terms of real life?
Yeah.
In what example?
For example, when you dropped out of school.
Exactly. That's what I wanted us to talk about.
Exactly.
That's a risk.
That's a risk. You took a risk. You decided. And it's you really have to think hard about the risk in this perspective. For example, if you dropped out and what you're doing didn't work out, your folks will try to tell you that you made the wrong decision. I'm just bringing in some psychology, then I'll answer your question.
Cool.
So your parents might try to tell you, or rather us, as your friends may try to tell you, Caleb, you're not so smart to make that decision. But on the flip side, now because things are working to your favor and to your advantage, people call you a genius.
For dropping out?
Yeah.
Okay.
Because they think you made the right decision.
You were smart. You thought
smart
ahead
enough.
of time.
Exactly. You thought you could see patterns. Okay, now you come back to the scenario where you talked about. Was it a risky decision?
When you took it?
Yeah.
Yeah.
Exactly. The fact that it worked out does not make it any less risky.
Okay.
Right?
Yeah.
Exactly. So it's whether it works out or doesn't work out, it was still risky. So the fact that now it worked out does not make it any less risky.
Okay.
Yeah.
But many people don't think about it in that perspective.
Yeah. So they don't take the actual idea that you took a risk.
Exactly.
So they forget that.
They forget
so recency bias and all.
You're
successful.
Exactly, and you're successful. So in life it's the same. Living, I also believe I feel like life is so fragile.
In what way?
In that there are so many things that can kill you so easily. Like it only takes one cell to mutate badly and you have cancer.
Oh, serious?
Yeah.
One cell?
Yeah, one cell.
Biology.
One cell mutates badly, gets
it's
cancer.
True,
yeah, it's true.
And everything else is
you have
gone.
to confirm.
But your opinions,
Or you're just walking, you're hit by a car and it's over. Or
okay.
Like
there's this page on Twitter, it's called Catastrophe. You guys should follow it. It shows catastrophic like live events recorded on camera.
Yeah.
Bro, life is risky.
Exactly.
Just living is risky.
Yeah.
Like you're just walking, man. Like that, okay, like that crazy madman who ran over guys who are just walking.
The Chinese guy.
Chinese guy.
Yeah.
You're just walking, man, on the road. Some crazy man comes and runs
exactly
you through.
hits you. So I feel like first of all, most people in life, and generally most people don't understand that the risk in life, and that's why so many people are so they try to play safe a lot. Like you try to really map out your life, like ikue so hakuna yo security nani haiko. If you really think hard, there isn't that security that you think you have.
And what do you think about job security? Is that a risk?
A very big one. Personally,
and what do people think out here?
I mean, for me, I don't think it's a risk. It's an insurance against risk.
Exactly. Someone is mitigating your risk, but that's more risky. Because
and people experienced it.
Just like we've described, I think the basic lesson
you
for
said
that
it's what?
is
Against
risk.
the basic lesson is it's more risky not to take risk than it is to take risk.
Exactly.
So
that's the point we're trying to
for that
drive
guy
home.
looking for job security, his main risk is not having that job.
Exactly.
Just wanting that $1,000 a month. Ako sawa.
And this is what people experienced last year.
Yeah.
Exactly.
Pandemic. Hit the risk. Sisi tumekuwa job the whole time.
Every time.
As we took the risk long time.
Exactly.
We've been working the whole freaking time.
Yep.
Guys lost jobs, layoff.
Yeah.
Like,
That's
or if
layoff.
the company goes under.
Pass.
So basically, we keep talking about that. There's a lot of risk when you take a job. So many people think it's a security. I don't know why they call it job security. They should call it.
But I feel like they also we need to talk about and also we have a lot to still learn. I also think from that perspective, because I've not gotten married. I don't have babies to take care of. Okay, I have responsibilities, like I have to pay my rent,
Wi-Fi,
but but for me now, I think I can still navigate. Now I always think about the more difficult it is the older you get, the more difficult it is for you to take risks.
Okay.
Yeah.
In that, if
there's a graph.
Exactly.
Age against
it's like
risk.
chess. When you're playing chess, you start with a pawn, and start with a bishop. You can open with very many. You can start with like you have very. But as the game advances,
you have to get strategic.
You're locked. You don't have to. You're locked into a certain strategy.
So starting off, you're doing
exactly.
different things.
Pawn yako ikienda na knight na bishop umebaki sasa. Lazima nijue venye ndacheza na queen na hawa na
so now that's looking at life now.
Exactly.
Early on in the life, you can take
in your
different
20s, exactly. You can
try
explore,
different stuff.
You can do things.
But later
on, as the curve goes higher,
lock.
It becomes very hard for you to take some risks.
True.
So now, but I still feel like there are people who have broken the odds or have beaten the odds.
Okay, yeah.
Like there are people who still take risks in some
KFC guy.
The KFC guy or
Sanders.
Rubenstein. He took like a big risk to leave job. Some people are forced into risk. I also think about that. Umevutwa job. Sasa hapa hauna issue.
As you were saying, like,
uko naked sasa.
Changamka.
Uko naked. You have to think hard.
Necessity is the mother.
Necessity will push. You get? So to think about it, it's very hard to avoid risk. It's very, very hard.
So risk, you should just embrace it as part of life.
Yeah, exactly.
Just
the only way to handle it is to
manage it.
Yeah, is to manage it and mitigate it.
Exactly.
Yeah, that's why you have like.
So we are all risk managers of life.
Yeah, in life.
Everyone.
Living is risky, bro. Living.
That thing is risky. You don't know. Look, today mimi naweza kunywa maji hapa ni choke I die. You can walk out there, be hit by a car. And this thing that people keep saying, and I think we'll talk about it on risk adjusted return, what you guys were talking about. You at this age, or let's say me at this age, I'm 24. Me and an older guy who's 70, hatuna difference in terms of death.
Yeah, true.
Yeah,
people
it's an illusion. It's an illusion people
think
have.
The guy at 70 is more riskier to die.
It's more prone to die.
More prone to die.
Yeah.
Hey bro, also me I'm at same risk.
Same
Corona
risk.
is an shika.
Corona
I can be
shika,
hit down there. I can fall, hit my head. That guy can live till 80. So akuna ati there's no limit.
Like you can't put a number to it.
Exactly.
You can't say 70 is riskier than 20.
Exactly.
Yeah.
It's
an illusion that
it's an illusion
have.
what you're talking about.
It's a fallacy.
So I think
Or a fallacy.
if you're listening to this, think about it. Just because saying, me I'm 20, I have so much time.
You don't have time.
There's nothing
You
like
don't have
that.
time, man.
Do what you need to do right now. Push, man. You can die tomorrow. Life comes and goes. And I was reading Solomon. He says death is the best thing that can happen to you on Proverbs today morning. I swear. He said it's better than
life is
birth. Death.
Or death.
It's better than giving birth.
No, it's the ceasing of suffering. Like
Cessation.
My Bible
the
is in the
cessation
car.
of suffering.
My
like,
Bible is in the car.
that's
Don't
it.
have it here. That should. Why did I leave it? It's downstairs anyway. But yeah,
You should have one in your phone.
I've underlined on the Bible. I'm gonna bahati. I would have preached today, but anyway. But yeah. So that's what we should continue. It's interesting because I think that's what people can resonate with
Exactly.
in terms of risk with life.
Mhm.
And same thing comes now in the markets. But before we even go to the markets, there was something you were touching on the quote. Repeat your quote. The quote you started. The risk.
The probability of loss
No,
of
that
more
one.
things.
That one.
The two kinds of risks. The risks that you have to take to survive and the ones
Yes.
the ones
Now
you have
that
to take
one.
to thrive and the ones that you have to avoid to survive.
Uh-huh.
Mm-hmm.
You dropping out of school.
Mm-hmm.
Was that a risk to thrive or to survive?
That was a risk to thrive.
To thrive, of course.
Okay.
Because there's no way that if I failed at Forex, I couldn't go back to school. If you think hard about it, I still had enough time to go back to school.
Same thing with you,
Yeah,
Taras.
Exactly.
Yeah, you still do.
So that's not something that I have to avoid for me to survive.
Okay. So it's a risk you're taking in
Yeah.
order to
Exactly.
thrive.
If you think about it, it's more tilted for me to thrive. Because again, if I probably never took the risk, I wouldn't have gotten where I am.
Plus, school doesn't give survival.
Exactly.
In what
Not,
way?
not that being in school now
Makes
you'd be making money or
or
thriving.
something.
You see.
Exactly. And
So
you know,
it'd be more terrible.
it doesn't even
Yeah.
mean that you have a job or
Yeah.
something.
Because
exactly.
I like this topic.
Exactly. So
You see-
if you think hard about it,
One thing I keep saying, not in a bad way, but okay, it's a life achievement. I'm not ingiliating you people, not attacking you guys, but celebrating graduation. The way people are normally so happy, thinking they've done it's a good achievement.
yeah.
Finishing medicine, finishing engineering, it's not an easy feat. Those things
Yeah.
are hard. Doing a master's, but do not celebrate it so much that you're so attached to it, such that I've passed with people pass with what? I don't even know those things. When you
First
pass
class.
first class honors,
yeah.
thinking that first class honors will give you success in life. Those things are totally
That's the thing now.
there's like a space
Gap.
okay. Yeah, there's a gap. Just because, so don't celebrate it, but don't get too attached to it such that you expect life to give you things easily. Now
Yeah.
things will come on a silver platter. You'll come and do the same things we're doing out here, what we're hustling, like
Hustling, yeah.
still it go same level ground. Now over there, make your own choices, decisions. Let's climb up the ladder. So
And I feel like the reason what you're talking about happens is many people confuse graduating with competence. Like
Yeah,
you
no.
assume because you've graduated as an engineer, now you're competent. That's
Exactly.
bullshit.
Yeah,
You're
and
competent because you've worked.
and you know
on
one thing, most
projects.
people
Yeah.
graduate half-baked students.
Exactly.
People are half-baked just because
Yeah.
Yeah.
you cooked your way up thinking
Yep.
now, I have papers and skill.
Okay,
Ukifika kwa ground.
theoretically they might be somewhere, but
Exactly.
practically they are
Yeah.
starting out. So like you have to first finish school, the theory part of it, now then go into the practice, then get the experience.
And
become
what are we seeing in the
professional.
world happening these days? These days guys are not being
Yeah,
hired
like-
bringing papers.
Yeah, nowadays actually like you learn
Like
on your job.
developers and all those.
Yeah,
But
yeah.
you know
Because
the
that-
world is changing.
Yeah,
If
the
you
world
think
is
about
changing.
it.
That's why people should really think about it.
Yeah, because
Where are we now?
if you look into like the works of Yuval, so Yuval is a historian and he describes history very very well. Like he talks of history not as a study of the past but as the
For
study
example,
of change.
on which book so that guys can know?
So if you look at 21 lessons for the 21st century, so he's trying to tell you that history, we're not really looking at what happened in the past. We're looking at how things changed.
Okay.
You get?
Yeah.
And so there's a very very good chapter on education.
Okay.
So he talks about what you guys are talking about. So if you think hard about it, the skill, the most valuable skill right now is not your papers. The most valuable skill right now is to be very good at learning.
True.
You get? If you're a developer, you won't rely on your computer science degree to prove that you're a developer.
True.
You have to keep on learning what's evolving, and things are moving very very fast. If
Very
you look
fast.
at very
Yeah,
very
true.
very fast.
Very fast.
So
yeah.
the most cryptos are only 10 years old, right?
True.
The people who learned crypto
And
10
it's a
years
market
ago,
cap of what now?
about
Around-
2
$2
trillion,
trillion.
Exactly.
right?
Mhm.
Who learned crypto in school?
No one.
You had to learn it on your own, right?
Exactly.
You had to devote the time, find some ways.
And by the time they're learning in school, we've moved on.
Exactly.
If they
Already
learn
we
in
have
school-
competent people in that field, so you
Exactly.
can't compete with them.
So basically, if you're learning it in school, it's part of that wave we keep talking about, the laggards.
Exactly. You're the
At the
last
end,
people to get
exactly.
something. You get?
Mhm.
Because if we think about trading, like I've been talking to several people and they've told me that we should think hard about probably outsourcing our problems to schools. Our courses, I mean, to schools.
I was wondering.
Our courses to schools.
Our courses
Yeah.
to schools.
And I
okay.
was thinking, if that were to happen, it will take so much time that before it happens, that market will be gone. Like, it would be already too late for people to start learning because it's a whole process. Right now, no one understands this as something lucrative. Very few people are interested. And this is the right time to be learning it. If you start learning it when everyone knows about it, they're already competent people, companies are established. It's no longer
it's way
valuable.
gone.
Exactly. You get? So for me, I think if from an education perspective, I'd champion for learning how to learn. Like if you can perfect learning to learn, you're better off than someone who's having papers or all these things.
So having the skill to learn is much
the most
better.
valuable thing. Yeah, especially if you're not doing the professional courses, because if you're doing medicine, obviously you have to go to school.
That one is different.
Exactly.
Case.
But if you're doing some courses like BCom, like arts, such things like accounting, I'm surprised that someone is still going to school to study accounting. I feel like that's someone.
Yeah, people should really think about it, because what's happening technologically,
exactly, the
these things
programmer
are
will
being
replace you.
programmed.
Exactly.
Accounting, these things, Izima, Vituza, these big companies. This how you remember that video watching for Warren Buffett when he was saying all the top 10 biggest companies back in 1990
are no longer there.
Yep. So same thing happening now. We have these big companies like PwC.
Yep.
They're the ones who come and do auditing for you.
Yeah.
Those things are rigged. Okay, I'm not saying they rig, but it's easy. It's human. So there's error.
Yeah.
Now we're sort of moving into this blockchain smart contracts and all. Guys will be saying, I'm not using you guys.
I already have blockchain.
There's blockchain. There's an AI that can do this for me.
Exactly.
I'd rather use it, and it's way cheaper and faster. Efficiency. Exactly. What's the name? Fusi says speed is better than time spent.
Yeah.
Giving someone some work and he's spending 5 days and something can be done in 1 hour. Come on. So that was just touching on that point you're saying.
Yep. Yeah. So I feel like that's my view, but that's my opinion. If
that's a good view.
If you're really thinking hard about, but it's if you're thinking about this problem, you need to go back to the roots. Most people who are in school know all these things we're talking about.
Which guys?
Everyone
school,
who's in school
in terms of high school, university.
Let me just tell you, like the fact that we don't know what's going to happen in future really keeps us sane. Caleb, let me assure you, if someone told you your trading was going to be this tough, ungekuwa saizi unapiga video shooting mbaya sana. Like you'd never come into this industry if you knew how hard it was.
Exactly.
So even those guys who are in school who don't know, like it's because they don't know what's coming like in their future, you see. So like they'll have to get that reality check. Hey, you're done with school. You think now, fuck, I'm getting work. Hey, 6 months later, no job. Hey, sasa unakuja unasema, let me now try and get practical skills. That's why people go to do, like someone has finished, let's say medicine, he's now going to do a crash course on programming because he thinks now, hey, like maybe his friends in programming are making more money, they're getting more jobs. So that guy now becomes now more active after a reality check. You see, the same with trading. You come into trading, you think it's easy, blow accounts, takes you so long to even make 10% a month. It gives you a reality check. See, you now come back into now. Hey, I need to work hard on my trading. I need to improve on this aspect and this aspect and this aspect. Like the lady we had
yesterday. Remember, reality check hit her hard.
Yeah.
And I think that's how life works. So even for these people in school, they'll just get their own like
map.
Yeah, their map will be just like for their like. I think life is also very individualistic. Like everyone has their own path.
But would you champion for your kid to go to university?
If they wanted to, yes,
not if they want to. If you're advising them, we're not talking about the kid's opinion. You're giving them your opinion.
For me, I teach them practical skills.
So you wouldn't champion for them to go to college.
But if they wanted to,
okay,
I would. Yeah, if my kids want to go to Harvard,
what do you think my answer will be?
Obviously, that's why I didn't ask you. I think I already know the answer. Okay. Yep.
Okay, unless the systems of education changes by the time I get a kid, maybe.
Okay, but we still don't have that.
Yeah.
Now I'm talking about your kid.
Yeah, like let's say my kid goes to the Thiel Foundation program. That's a campus. You see, it's a campus for entrepreneurs.
Parts of shika $100,000.
Exactly.
Leave school. Go do your thing. But philanthropy.
I feel like we have to think about this from this is a tough question. We'll change the whole of this topic. But anyway, most people who are in school because of the system. They're not
Yeah,
there
yeah, true.
because of they're there because
System
the
of what?
system. The system, that's how the world works.
Okay.
They
So
were taught that
conventional
exactly.
means-
It's
okay.
a conventional way of looking at things.
Cool.
For you to fit into society,
Yeah.
because Caleb, you can't fit into society if you're not educated and already proven that you are good at what you're doing.
True, especially
get
in
me?
Africa.
Exactly. For example, if you are not trading
Mhm.
and you are not trading or you are not successful at trading, and then you try to fit into a conversation with people who are from school, there's a high chance that conversation won't flow as well as you'd want it to, or rather you won't be able to
Mhm.
fit into that social class. You
Mhm.
get me?
Mhm.
So as we move up, we keep on filtering the social classes because there's the social classes of humans. So
Mhm.
we have the middle class, upper class,
Upper
education, we
middle.
have professors,
True, true.
watu wa masters hivyo,
Mhm.
undergraduates,
Mhm.
entrepreneurs, kuna serial entrepreneurs successful, kuna wenye wana start out, kuna you get.
Yeah.
For you to fit into society, most people are told, listen, get these good grades for you to fit into society,
Mhm.
finish your degree, then you can move now and do your things.
Mhm. And I think that's the most conversation they have. Just get it.
Exactly.
Yeah, just go and have it.
Because even if you have conversations with people who have graduated, like tumechill na kina Shiri,
Mhm.
tumechill na
Brian.
most of these people tell you alifanya wazae hii kitu.
Yeah.
Like that's the
Hapana, yeah.
conversation. Like I knew it. I was not even invested in
Because
it.
both those guys, they're doing something else.
Exactly.
Different, totally. Mhm.
So there's that aspect also. You have to think hard about it because people
Mhm.
think if I don't have a degree, there are certain places I can't be accepted. There are certain things I can't do. There are certain. So there's that fear also that keeps people from venturing out into other things.
Then they kill a lot of dreams.
Really?
Yeah.
Why?
Because if you're fearful of venturing into something you really want to do, aren't
Okay,
you
okay.
killing a
But
dream?
if you clear school, I think many people venture into what they want to do.
But
like
now-
you just said.
But not really. People finish school and they end up now, because look, you're already in the system.
Yeah.
So when you're in the system, sad to say, you're sort of brainwashed. So you know the next step is what? I come
Getting
out
a
and look
job.
for a job.
Mhm.
Exactly. You come out, look for a job because time is moving. Especially, I've talked with a lot of ladies, especially on the ladies' side.
Yeah.
Time is
You've
moving.
talked with a lot of.
On the subject.
Anyway.
So time is moving.
Yep.
So they're also looking for security early on, life, family, and all that. So they want to build that. So they have other aspects of life they're moving towards. So in coming out of school, they don't really take so much risk in terms of that, like doing what they want to do. Most people, how may you think of it? People come out and do what they did instead of coming out and do what they want to do. Most people.
But people fear pursuing what they want to do. Like many people they have the fear of what if it doesn't. Like we kill our dreams before we even start.
Exactly, and that's what I'm saying. Now these people end up killing their dreams.
But that's
fear.
a problem of fear, not universities.
Yeah, that's not a problem of university.
Mm,
Yeah, I was
no,
adding to
that's
your point.
personal,
Yeah,
yeah.
that I was saying.
Also,
that fear is killing the dream.
This topic is this topic can be wide. I think we should have a podcast for this topic. 'Cause
Should
also,
go back to risk. Yeah.
when you look at it, how many more successful people went to campus? Okay, if you look at success rate, how many people went to campus? How many people did not go to campus?
Many people went to campus.
Yeah, of
Yeah,
course.
that's
a
true.
lot of
Yeah, a
people.
lot of people went to campus.
Went to campuses.
Yeah.
But the question is, did these people succeed because they went to campus?
It gave them
I-
an avenue to succeed.
Okay.
Like without that
Like
avenue,
a stepping stone.
yeah, stepping stone. You see, like all these CEOs, MDs, most of the CEOs, they have papers.
Yep.
Most of, like ukiangalia the entrepreneurs, like they're just 10%, 5%.
And I also feel like what you're talking about is the invention of the internet. Because if we go back 20 years, 30 years from now, there was
That's
no way
what,
you could learn.
1990.
Exactly. There was no way you could learn trading.
Yeah,
You wouldn't even have the chance to do it.
impossible.
You get?
Mm-hmm.
What's happening is, like Lavi, you're saying, yes, long time ago that strategy worked, but now it doesn't.
Exactly.
Because if we extrapolate 10 years from now, 20 years from now, the people who will be the CEOs of the big companies or the people who will be running the companies are not professors. They're the people who have learned how the world is now moving.
But a professor can't be a CEO
Why?
Why?
because his job is to teach. Like his main job is to be in that campus to teach people. So
yeah, that's
yeah,
okay.
yeah,
It's
yeah.
training.
yeah, it's training.
Yeah.
So
But but you know, I feel like that's a point because being a professor is the pinnacle of education. Like you're at the top.
yeah,
You're finally.
It's rare to find professors, okay, and like
Actually, sera wananga haja ya pesa. Like they are so lost into
What
just
they're doing.
what they're doing, and that's why I think, for me for that topic, I think it's more of life. Like everyone has a path in life.
yeah.
And
Yeah.
that's different from yours. Yeah. I feel like
Pardon?
that's true.
Yeah.
Everyone has a path that's different from yours.
Yeah, exactly. That's different from yours. So,
But now, in those paths, also, I'd ask you which path works more. Because if you're pursuing a path and you have a path, why
No.
would you pursue a path that's...
What? Hey, lose up.
Which path works the best?
In terms of what? Like going to school or not?
Exactly. Because if you look at what Thiel is doing, Thiel is not stupid. He doesn't think that people don't have the same path.
Yeah.
Thiel argues that school is not working.
Yeah.
That's his argument.
Mm-hmm.
You get?
Mm-hmm.
You also believe it doesn't work,
Mm-hmm.
right?
Mm-hmm.
So as you think about such things, you also have to think hard about, okay, there are these 10 paths that you can take. I feel like that's how I personally think about things.
for me, I think of it as a system issue more than an individual issue. Like it's not like it's a systematic issue. You see,
But there's I don't think like societies suffer, it's individuals. So
Like-
if you're making decisions, it's an individual basis. Like you
Like,
can't
even
say
for
we're
Thiel,
suffering.
You'll say I'm suffering.
Yeah. Kuna society usikie uchungu.
but it happened because like
it's individuals.
you were in a society. You see,
Mhm.
Like it's you made the decision to join, even if you have joined a society or a cult, you're the one who made the decision to join that society,
Mm-hmm.
right?
Mm-hmm.
So you can't talk about us. You have to be an individual. Like individuals make the decisions.
and I think that's why again you're losing me, because I feel if you look at Thiel, he's forming a different society. You see,
Mhm.
he's not trying to form a society already. It can't be changed.
Mhm.
So everyone in this system is a victim of that system.
Mhm.
So unless you form another society and form another like a whole
Culture.
mentality and culture,
Mhm.
already hii side ingine ni all these individuals in that system are fucked. See?
I agree.
Yeah,
I
so
agree
like you
with
need to change, not like one person preach to one person, like come and create a whole other.
But you can't create a system like that. That's why I disagree with you.
Ecology,
A system is
mm.
created by individuals. Like if you look at the system, how it's evolved, like no one sat
It's
down and-
individual. So you're
Exactly.
saying it's not a whole.
It's not a whole. Like
individual.
individuals come up, and as they come up, like how did we meet in trading? I didn't come and tell all of you guys, let's go to trading. No, it was 3 individuals pursuing 3 different things, pursuing the same thing, and then they come up and form something.
So what you're trying to say that change starts from an individual.
Exactly.
Yeah, that's true. That's true.
It doesn't start with a society. It starts
Okay.
with individuals like you championing for something that's different.
So to go back to yours, so in this society, is Peter Thiel the one who's that individual?
Yeah, like
to
that
champion.
first person.
Championing,
Yeah,
exactly.
like that first person. Mwenye ameanza, unaona? Like you can't.
You can?
Like you can't judge this other society because already it's not like a one unit. No. For Peter Thiel, at least, like we know the person doing it. We know the people in those foundations. Like the people joining those foundations. But now for CC, bro, we are almost like 90%, 99% of us to go in that system. You see. So in as much as like it's for us now, like individually to like emancipate ourselves from that cocoon, itakuwa
Mental slavery.
yeah, from mental slavery. Yeah, exactly. Like it's a mental slavery, as Ken is saying. So like the society itself is the problem. You see, like because we are born into that
Society, the system.
society system. Yeah, we are born into that. So unless the system changes, you see,
Do you
like,
think it can change?
You form exactly. That's why Thiel is forming another system. See, to change this.
Do you think this one can change? Or it's already too established, especially in our minds, to change?
So okay, one.
I think it will change over time.
Yeah, over time, exactly.
So
like,
it's a
yeah, over time. Like,
progressive
exactly.
change.
So like people will now come and embrace this other form of learning, form of employments.
It will
Yeah,
change.
that
Yeah.
day will come.
Yeah.
Yeah, exactly.
When
Like
guys come out of these papers, especially in Africa, now
But
we are
not in
but-
your generation.
yeah, but exactly.
100 years from
not in our
Yeah, not
generation.
in our
Exactly.
generation.
So
Not in our
for this generation and for people who are in school, just allow them to be in school.
That's what
I can't tell
Yeah.
them
And I
to
feel
drop
like it's
out
also
or
very, very
anything.
important to distinguish. Like we're not against education.
Yeah,
Yeah,
and
yeah,
also
yeah,
me,
yeah.
I like putting that.
Like
if you're in
we are
school, my
champions
sister
of
is in school
education.
studying medicine and all. I wouldn't tell her, hey, drop out, there's better to do over here. Hey, go, do your thing, man. Like you guys are you've kept saying here, everyone with their own life, their own journey. So my own trend.
Because also
because everyone has an opinion on how you're supposed to live your life. But they
also
have
I feel like now for me I differ with you there. I feel like yes, there's the individual path that you want to take,
Mhm.
but probably you should think hard about it. Because, okay.
Men rather die. I keep telling you. Then
Okay.
think, Ken.
To
They rather
sum up,
die.
to sum up that story, like
Okay.
Yeah, because
If
we need to
you're-
go back to risk.
exactly.
Yeah,
if you're like, let's say they've said like
My sister.
I've decided me, I'm going to school, I'm going to do these things.
Yeah.
Like if you are sure, Caleb, that these things are outdated, like these things won't help you, why would you still leave this person to pursue that?
Cause
Okay,
It
you'd
depends.
advise them, but
yes,
the decision depends on them.
decision depends on them.
But I think your opinion
Plus-
also counts.
My opinion counts.
Yeah.
Plus, it's the same way the people who were telling me to go back to school, the opinion counted. It's just that me went a different way. Okay, it counted. Maybe I'd be doing some film stuff. Okay, I did film. Maybe I'd be doing, let's say, another career, engineering, what we were doing before we dropped out. Maybe I'd be good at it. No one knows. Okay, now what I'm saying, there are certain careers which is best, especially if you, like my sister is doing medicine. Medicine is a good career. You need to go to school and learn.
Yeah, that's
So,
a professional.
That's a
course.
professional. Piloting, those are different.
Piloting naweza learn hata
But
mimi.
piloting, I think anyone can learn.
Yeah,
But things
piloting
like
is
medicine,
fine.
because medicine, if you come out here, you're not in school. So
Yeah.
let's say you're doing medicine. And,
Wait, I'm not okay.
okay, you're in school
Uh-huh.
and you're doing, no, I'm saying, wait, you're in school, yeah.
Yeah.
You want to do medicine.
Mhm.
Before you treat anything, kuna procedures. Like you want to deal on a live body before
Yeah.
procedures are
Yeah.
met.
Yeah.
And it takes a lot of learning.
Yeah.
Now,
Just like
you
training.
give anyone who's not going to school,
Mhm.
you're telling him, hey, me I've learnt online, treat me. Exactly.
Yeah,
So
that's
it
how
depends with the profession we're talking about.
Exactly.
You get? So
Yeah.
medicine is good. Now when it comes to these things like accounting, especially computer stuff, bro, coding online, you can get information anywhere.
Yep.
Forex, as we're not going to school.
And have you heard of this? I don't know if it's, but anyway, let me not talk about
This,
something
tell
I'm
me,
not
come
sure.
on.
Caleb, would you advise someone to come to your school
Yes.
of Forex?
Yes. You know why? This is not just a school of Forex, it's a school of life. We're teaching you how to learn.
Yeah.
You know, in school, we are always telling our students, even if you don't take this course, learn career as a career. Whatever you're learning from here, look, we've learned a lot philosophy, discipline, principles. Like you've learned way more psychology, your own psychology, how you mind things.
Yeah.
So that's basically a school of life. And I think it's the best place to learn because basically the market is an arena full of psychological madness.
And I think that's more useful than having papers.
Exactly.
That's what
Because now
I would
you
say.
can survive in life.
Exactly.
Ingine ni vile ulikuwa unasema theory. Theory is telling you survive. Anyway, you guys go back to risk. Tumeenda huko
You are so lost, man.
different type of okay, you guys.
So we can start with different kinds of risks. I think I can mention two. One is system hopping. I think for the newbie,
First, like, why are there different kinds of risks?
because markets are dynamic, so there are different elements to the markets. There's the systematic part. There's the risk money management. There are psychological risks. There are
Yeah.
markets changing, fundamental risks. So there are very many ways to look at markets, and all these ways pose risks to the market.
Did you have a different answer?
As you're saying, like, there are more things that can happen
Than you can imagine.
than you can imagine. Yeah,
Yeah.
exactly. So it can't be just one. And
Exactly.
another thing is
Exactly.
you can't put a number to risk.
You can't
You can't be
quantify
saying,
it.
I risk 1% per trade, and you say you're a trader. That's not risk management. That's not risk. Yeah. So continue, Ken.
Yep. So anyway, so to start on the different kinds of risks in the markets, I think now we're talking about the context of trading.
I think we should first give a shout out to who taught us this.
Howard Marks.
Billionaire.
And this is after what? After what? What
Yeah,
made you learn?
after my blowout in oil.
So
Hey,
Taras
went down
blew his
and
account
did
and got
research.
promoted. This is a good industry. You blew your account, got promoted to head of risk management.
Yeah.
Anyway.
So,
So you're the one who looked. Was it you, Ken?
It was him.
it was me.
It was
Yeah.
Taras, yeah.
So,
But I knew the platform, but he
Yeah,
got
okay.
the risk.
So I got that. So Howard Marks is a billionaire investor, head of CEO of Oaktree Capital. Yeah, I think they manage about 40 billion.
No, about 100 and something.
100?
Oh, serious?
billion. Yeah.
100 billion.
Yeah,
Ah,
managing
that's-
about $100
Eh,
billion
bana,
dollars.
That's 10
Mm.
trillion
So-
Kenya shillings.
Yeah, man. I'm a rich man.
Budget ilisomwa juzi. Anyway,
Yeah. So I think for me, like coming back down to look at these great people, that's a billionaire talking about risk. And me, like for me as a new trader, why am I not taking so much time to understand this, which a billionaire is taking time to understand and even write an article to
Okay.
help other people.
Mhm,
So hey, I came down and said risk management must be the holy grail to trading. Yeah. So
You do believe that's the holy grail?
yeah, I do believe that's the holy grail to trading.
Yep.
Risk
Risk
management.
management, yeah. So
I also feel like that's true.
mm.
If you can't manage risk, you're dead. You're dead.
yeah,
in
yeah,
this game.
even
If
with the
you have a good
perfect
system.
system,
Even
even
if
with
you
the
have a perfect.
like
Because if you're
our
doing your back
friends.
testing, have you seen the number of times markets do the unexpected?
yeah.
Gold imeshuka 1,000 points in sijui how many minutes. Where
yeah.
risk
Yeah.
ni
Our friend Anthony
friend?
Wins,
Yeah.
very good 5-year
For
track
5
record.
years. Track record.
Consistency
Good.
of about 10% monthly
Per month.
in 1 or 2 weeks out of business,
done.
losing more than
You lose everything.
more than
Like
$1 million,
$10
$3 million.
Oh.
10.
Just
$10 million.
Yeah. That guy
good.
was managing a
Yeah,
billion.
billion shillings. You see, that guy lost $1 billion shillings. Oh my God. Guy.
In 2 weeks.
In 2 weeks, I die.
And
Hey,
it's
I
how
die.
many? It's in 3 positions.
Yeah, in
ama
3
it's
positions.
GU
Yeah,
longs
yeah,
and
yeah,
something.
yeah. So,
Grandiosity.
yeah. No, okay, not even. It's just
Okay, we
like
don't really know
you
what he-
don't
Yeah, but
know.
we
You
don't
don't
know
know.
what he
Yeah, you
did.
don't know what he faced.
Yeah.
Yeah, maybe
But you know, they
over
even-
leverage.
Okay,
There's
but
just
I think you
so
keep
many
saying
reasons.
more things
yeah.
happening than you can
And yeah, you
imagine.
can imagine. Hata hatujui what killed him.
Yeah, we don't know. Many,
Yeah,
many
so-
Got
aspects.
another scenario, but then you'll talk about
Don't forget.
Yeah, so yeah, as we talk about the different kinds of risks, so Howard Marks was the person who alitufunza hii topic and
Mhm.
tumefunza a lot of people
Books
also.
is written.
Yeah, books is
Books?
written.
He's
There's
written 2 books.
2 books, yeah.
One called Mastering the Market Cycle.
Mm-hmm.
A
That's
book
the recent
about
one.
a book about cycles in the markets, and then
Mm.
he has another one called The Most Important Thing Illuminated,
Yeah.
where he talks about 18 very important things for every investor to understand.
Yeah,
Okay.
true.
And the what you found on risk, what was it called? That
Memos of Howard Marks.
memos.
Yeah, memos of.
The memoirs
Yeah.
or memo.
Memo, like he
Okay,
write memos
okay.
to his
Memo.
investors.
Okay,
Actually,
so cool.
it's not for us. It's for his investors.
Okay.
Like it's a platform to just update his investors of what he thinks.
Mm-hmm.
About
So I remember he
markets.
brought 2 of
About the
them. So
markets.
there was the first one.
There was the first one which was risk. Then there was now
Risk
risk repeated again, revisited
Revisited.
again. Yeah.
Okay.
Like that guy was putting too much focus on risk, man. So hey, for me, I had to like just settle down and
Which now you brought it
understand.
to the team. Na
yeah, I brought it to the team, yeah, and we all appreciated it.
That's why it's
Yeah.
good to work in a team.
I think
yeah.
Van Tap also has done some
Yeah,
very
Van
good
Tap
work
also.
of explaining
Yeah.
risk, and
risk,
money
yeah,
management.
position
So,
sizing.
yep, if you're
Mm.
trading man for 10 years, usidhani unaweza escape kumanage risk. If your risk management is sloppy,
You can't survive past
Can't
3 years.
survive.
I don't think 3-4
you
years.
can't, you can't.
Mm-hmm.
You can't.
Yeah,
You,
so-
you really need to be smart around it, and that's why I think most people don't think about trading in that long-term perspective. Like you're so invested in this one position.
This
And
one
like,
account
eh,
of $1,000.
Uko so invested, you don't think about like what will happen when you'll be managing $1 million, $10 million.
Yeah, like,
Do you have such a plan?
like have you ever even thought about managing $10 billion?
Exactly.
Like have you ever put yourself
Put
into
yourself
Howard Marks's
shoes.
Now
When
you're
they
like
give
you're
you
Ray
the
Dalio.
budget.
Like you're Ray Dalio now. You're
Which is a
managing
good
160
thing
billion.
people should be doing.
Eh,
You think how you're trading right now and imagine you have $1 billion.
billion.
Would you
trade
trade
like that?
it? Exactly.
that perspective?
Think.
Okay, but okay, yeah, that's. Would you think first? I'd change it into that. Not would you trade. Would you think in the same way? Because
Yeah.
True.
if you really
So it's
sit
changing your
down,
mental.
exactly your
state.
mental framework or your mental map.
Mm-hmm.
If you sit down and think hard about it, if you have a long-term perspective, if you're making decisions for the long term, your decision making is very different from
True.
someone who's
True.
making decisions
And
za kesho na
Watu wa
kesho
kesho
kutwa.
what understand.
Decisions
they'll
zako.
never understand.
You have
Yeah.
seen
Yeah,
future,
they'll never.
like dropping out and starting
Umo na
forex to do it
bus,
full time,
exactly.
opening up an office. It's thinking long term. This other guys like, because it's the guys who I was with yesterday were very good and open with me. Shout out to those guys, Justin and Eugene. They're telling me,
My
hey,
schoolmates.
you guys, your schoolmate. That guy was telling me, honestly, I had never thought more than 30 trading bigger than prop firm. He thought
Pardon?
that was the
Never thought.
epitome. like in terms of
Oh,
trading,
he never
that's
knew
where he's
that-
going to
like,
reach.
prop farm
Like
level
prop
two.
farm, you're trading FTMO, nice nini. Hedge fund, uko trading public money. Those guys were nice. They were telling me that.
They've
Which-
never thought of it.
Now listening to a podcast, they're saying, okay, now this that idea
aspect
came.
of professionalism.
And okay, but people think differently.
People
okay.
think differently, and people exposed to different
Yeah,
things.
but-
Exactly.
Now we
Exposure
expose
is
them.
the
Now they're
thing.
saying
Yeah,
they are
yeah,
looking
yeah.
forward to doing hedge fund, which is a good thing. That's now the epitome of trading. You're trading big people's money.
And I think it's because like that professional level of trading is never hyped.
Yeah, it's never
What
hyped.
is hyped is selling signals,
Selling courses.
courses. You see,
You know,
like,
that's the picture.
yeah,
retail
that's the
traders
picture of
have.
retail
Exactly.
trading.
Yeah. they're not
Yeah.
exposed. Social media.
Yeah.
Onangi, people don't follow Ray Dalio.
Redalio hata yuko social media.
And even he never
Unaona
posts about
lifestyle.
markets. If you
Utasoma
follow Ray
wa-
Dalio, he's just
Akina
posting
Howard
about
Mazate,
principles.
utasoma vitu yao tu hautawaipatiana nao sijui.
Social
Mabilionea?
media.
Ai, oh.
Yeah, so be very careful. Guys, you follow online social media.
Risky. Zina increase risks.
Risky endeavor.
Yes,
Anyway,
social
Ken,
media risk.
you're talking about your two. Then
Yeah,
Taras
can
was giving a
continue.
shout out. What were you saying?
Okay, so first of all, I think the most important risk to avoid when you're trading is the risk of ruin.
Yes,
Mhm.
that's the real
that's
risk.
the beginning. So
Yeah.
the risk
The
of
dead-
ruin
the
basically
dead
is when
Mhm.
you have blown an account and
No
you're
money.
out of business.
Yeah.
Out of business.
Out of business. Auoni markets.
Nikaa nyumba yako imechomeka.
Ukiona opportunities awezi chukua. Uko out of business. Yani aufanyi biz.
You're out.
Umefunga.
Mhm.
If you're a trader, that's the one thing I'd tell you to
Number one
think
thing.
hard about how to avoid.
Number
Exactly.
one
Yeah.
thing.
Number one.
Mhm.
Think hard about and imagine all scenarios that can happen for you to blow that account. Usifikirie tu moja.
Mhm.
Ati hii trade nasikianga watu huko this trade hii trade ndo ile sasa inaenda
I hear that a lot here.
was it done
I took that trade, it was the one.
exactly there's no trade that's the one so
Mhm.
one think hard about how to manage risk of ruin. I have my words of advice for you on that, but I think we'll cover that on some risk management strategies, so to come back to you before we clear up. That's one. And the next one I think that I'd tell you to avoid is the risk of undercapitalization. So
Mhm.
if you don't have enough money in your trading account,
Mhm.
and if you have extra pressures in life pushing you to rely on this small trading account,
Mhm.
you're done. There's no way for you to avoid the risk of ruin.
Mhm.
So if you're really aiming to trade,
Mhm.
don't think of trading tomorrow. Think of trading long term. Think of your trading from a 10-year perspective, from
Survive.
a 20-year perspective. Exactly.
Yeah.
Once you start making decisions from that framework, you have made progress. But if you're making decisions na next week nafaa kwa market
Ama kesho.
ama kesho, you
Have
still
to trade every day.
you've not understood what you're doing. So understand those two things first, and then you can move on to other things.
Okay.
Yep.
Caleb.
Today I'm learning from you guys.
Okay. May I
But
talk
anyway,
about,
just one thing,
Mhm.
just to add upon is risk of falling short.
risk of falling short. Yeah.
So many people, like what you've just touched upon, you have targets. You there are these things you want to do.
Bas.
So you're trying to reach a certain. My account is at 500, and we get these people a lot. They're looking to pay rent. Or you remember this guy was telling us, one of our students, to trade for their birthday. So I want an account before my birthday.
Unaona so si msana make decisions at 10 years.
Manze.
Wewe msana make decision ya next week nafani kate na hii pesa.
Fund me before my birthday. Then now you get money, you start trading with those expectations, especially in markets. And this guy Mark Douglas talks about it. Expectations, it's those internal and external stuff. So internal, you're perceiving to have something, but external, it's giving you a different result.
Exactly.
And those two they're fighting one another.
That's where
Normally
stress originates.
Exactly. When you're in peace is when external factors and internal factors are in line. So I was
in
expecting Ken to bring me coffee, and he actually brings it. So my internal was reciprocated by the external. But now I was expecting Ken to bring me coffee. He brought me some cold ice juice, so he didn't bring, or he didn't even come. Okay, so different stuff. So expectations in the market now, expecting to have a return. Hey man, you'll be disappointed. Like now you'll start taking trades that you're not supposed to take. System hopping. This one is not working. I have a target. So don't have that in mind, man. Just have certain targets. Do not put emotional attachment to them. Yes, you expect, in terms of expectation, now that's deeper, because also Mark Douglas goes deeper and says, have expectations but don't have strong emotional attachment to them. Like, may expect Ken to do this, expect Taras to do this, but if he doesn't do it, perceive it differently. Okay, don't be so attached to that outcome. So same thing with the Marcus. Don't be so attached to a certain outcome or something happening, and when it doesn't happen, you start doing things that are not systematic and all.
Yeah,
So-
and on risk of falling short, I think it happens. I think you've pointed out on the bad side of it, like a trader who is a small account, but I think it happens even to investors. Like
It mostly happens to investors.
Yeah, mostly
actually.
happens to investors because investors.
retail traders hata wananga target.
Yeah, exactly. What target?
No target.
Wana target tu jamaa.
But investor bro,
Lekelea.
msako na $1 billion, you see.
Okay, so-
$1
and
billion.
he's trading people's money.
He's trading people's money.
You know there's no loyalty to your money, sijui to your fund.
As to your fund,
If fund yako inaleta 5 na huko kuna mtu akona
10,
15.
money flows there, you see.
Nenda huko.
So like the fact that you have kwanza there's the industry benchmark of returns, you see.
Yeah.
You say S&P,
Okay.
yeah, S&P may perform 13%, wewe bado hedge fund yako iko 2% up.
Sasa yeye ni buy index.
You see, so
We fall short
yeah,
mbaya.
yeah, we fall short by almost 10%. Subconsciously, even you without knowing, you'll just buy some other companies thinking they'll be the next breakthrough.
Exactly.
Yeah, like just making irrational decisions just because you want to hit that benchmark. Just a benchmark, you see. So the fact that you have like you want to trade to reach a goal, like now, like a goal that markets have not given it to you yet. Let's say for a quarter, for a year.
Yeah.
Napata ni December bana, msana file return zake January baada kwa negative 4%, which is not a bad return, but
But benchmark.
he wants to be to deliver alpha, you see.
True.
The moment you make some few mistakes, instead of even that alpha coming, you now go down to negative 8%. You see, so it increases the risks in trading. Like you make the moment you break a rule, markets are there to punish you always. Ziko rada kiboko. So like you break a rule, they are there to punish you. Yeah, you don't understand that you don't accept that negative 4% return annually. You want to do your magic in a few weeks, punishment. Yeah, so that's a very, very big risk. Also, us as traders, as retail traders, are working as part, working traders as a fund. You see, you want to, let's say, deliver alpha for the fund. It's just subconsciously, if it is subconscious by the way, like you want to also improve your trading. See, it's like you want to just do good. So instead of following the right path, akili yako huko ndani imefanyiwa some magic, nataka kufind a shorter path to getting alpha, and that's when you look at your now the risk adjusted return. Even let's say you make that return, let's say you are -4, then do some magic, you're at 13%. In 2 weeks, if you look at that risk adjusted return, you took too much risk for you to get that return. So risk
You
of
guys
falling
have
short,
been mentioning risk adjusted return a lot. What is it?
risk adjusted return, okay, it's basically most people when they talk about risk, they just talk about risk.
Okay.
Trading is risky,
Yeah.
I blew an account, but you didn't factor in the risk adjusted. Okay, risk adjusted return is you look at your return first.
Okay.
Let's say you had a 10% return,
Yes.
but how much risk did you take
Did you take?
to get this return?
Okay.
So like you take your return and you put it to a factor of your risk. So
Yeah.
let's say you got a 10% return this quarter.
Yeah.
How many trades did you take? How many, like what was the exposure on those trades?
Yeah.
What was the leverage on those trades? So like you need to factor in a lot of things that, like as you took those trades to give you that return, what was the risk?
What was
Like
the risk?
if things had not
Gone your way.
in your way, what risk would you have instead of the return? So unapata msana nakwambia last month nilikuwa na 20% return, but what if all his trades were negative? Unapata maybe angekuwa down 80%. So that risk adjusted return is negative. Yeah,
-4.
so yeah, -4. So unapata for you to have a solid system, it has to be a positive risk adjusted return. Like your risk is less than your return always. Yeah, the moment you're taking more risk for even a higher return, okay, you're taking more risk for a big return,
the risk adjusted return is negative.
And this way investors now should pay attention to if they're investing their money. Like if you want to invest in Mansa X, SIB,
exactly.
what's the risk on
Yes,
the table?
They're telling you 24% return.
4%
but
return. What's
they never tell you what risk they took.
Yeah,
to deliver that 24% return.
And people never look at
Yeah,
that.
people never look at that.
Never. Never even ask.
Never even ask,
what
yeah.
risk did... I think that's more important to ask than asking what's the return.
Someone comes and asks you, hey Caleb, if I give you this 10 million, how much will you give me?
Exactly. Instead of asking,
how much
what risk do
of this
I
money?
have?
Of this money, how much will you risk in the market?
Exactly.
You see, like how much money should we accept to lose if things go bad?
Exactly.
Then you tell him, out of this 10 million, we can lose 3 million. In pass it off, 6-7 million. You see, so at least hapo umeongelea risk, to risk 3 million, in pass it off about 7 million. So that's the level.
Because to the downside risk is finite. To the upside it's opposite, infinite.
Yeah.
In terms of return, you can
in terms of
go.
exactly. So that's risk adjusted return.
Yeah.
From risk of falling short, I think there's the leverage risk. So leverage risk, basically, leverage first of all is sort of getting account markup from your broker. So let's say you are trading $1,000 account. Your broker marks up your account by a factor of 100, 10, 50, others up to 3,000. You see, I think we saw that. So let's say you're trading $1,000 account, but this broker gives you a leverage of 1:1,000. That gives you an account of 100,000. You see, now virtually you're managing $100,000.
Virtually.
It's true.
Virtually you're managing $100,000.
Hauna
pesa. Like your real money is 10,000, is 1,000, but virtually you're managing 100,000. You see, so
wait. You have $1,000 account,
and
leverage?
$1,000.
That's a milli, bro. Do the math.
And $1,000.
Exactly.
Oh yeah, $1 million. Yeah, $1 million. So, like virtually you're managing $1 million. So you're taking positions.
Buying power.
Yeah, buying power. You're taking positions that a person with $1 million account should be taking with $1,000 account. See, so, and leverage. It comes down to, I think brokers offer it majorly to retailers because they want to put many trades. Like hedge funds don't. They take very very small long-term trades, you see. But retail trader andaka kwanza Monday by 4 p.m. akona
hedge funds, I think
MT4.
the highest I've had someone hedge fund leverage like 1:5.
Yeah, 1:5, exactly.
Like this guy who blew 20 billion.
It was 1:5. Imagine.
Seriously.
Yeah, 1:5, bro.
1:5.
Kablo hivyo.
Bro,
Imagine with 1,000 you
retail
get.
manze tunakora.
Retail exactly,
It's
man.
tricky,
So
man.
that leverage risk. And I was listening to someone chat with traders.
Yeah.
He was saying, for a new trader, don't go past 1:5. If you want to trade objectively, learn trading well, you'll try and put the third position when not enough money.
Exactly.
You see,
So
it limits you to
take
take discipline.
below.
Exactly. But you are there, $500, leverage of 1:1,000, 1:100, 1:200. You can take bigger positions, multiple positions. Yeah. So yes, they can reward you better. Like if luck is on your side, because as a beginner,
Beginner's luck.
Yeah, beginner's luck. Luck is on your side, over leveraged positions, over leveraged account.
Yeah.
We make a lot of money, but for that account to die, and I think that's why many people blow accounts. Than you hear someone saying, I had $1,000 account, and now I have 20 million. See, but how many people have $1,000, 10,000, but they blew it? Because leverage it takes you down faster than it takes you up. Because like these scenarios of these negative scenarios in markets can easily catch up with a new trader.
True.
A bad position sizing on a heavily leveraged account. Most people blow accounts because they didn't understand what happened. In a few minutes, my account was not there.
Gone.
Atilieka gold huko. Ukirudi sina.
Sasa elewi position sizing, amekuja kwa position sizing dawa ameweka 1 and then ni euro dollar.
$1,000 account.
Almost nothing. You see, so leverage.
Straight to the gutters.
Like for new traders, for people listening to this show, if you are starting out in trading, please cut down your leverage to less than 1:50. That will allow you to at least be disciplined and make some money.
So
Cheke me.
atasema hey, unataka nisimake do
Mnanidanganya.
actually one and it's a problem because for our funding program is 1:50. But now most students tell you, hey Taras man, I thought
Up
it's
it up. 200.
make it to 200.
I remember that one. Yeah.
but you know I feel like to just sorry for interrupting you. So I was saying most traders don't understand that when they are learning, their goal should not to be to make money.
Man,
You should do what?
To avoid losing
to avoid
money.
losing money.
Because there are higher chances you
You
lose
lose
money.
money. Yeah.
Exactly, like
So, control that.
umeanza kutrade na ujalose pesa yako yote. Congrats man, that's progress.
That's true.
You get? Because traders tumeona you don't survive 5 years. How many people walianza kutrade wana trade bado after
filter.
5 years?
Filtered. Markets filter.
Exactly. You're out of business in no time. You do some, markets, they're very, very good at punishing you, like Lavi said. You just do 1-2
kurumi.
mistakes and you're out of business.
Yeah.
True.
So in the markets, when you're starting out, if you're a newbie, goal number 1, learn not to lose money. If you have learned to avoid your losses, to avoid over leveraging, to avoid big drawdowns, like let's say you've been trading for 1-2 years and your drawdown is just 20%. Man, congrats, man.
Good stuff.
Good stuff. You're doing great, man. As a trader, you're doing well. The next 2 years, aim to be at break even. Sasa nimeacha kulose, acha nianze kumake kidogo.
Una
You
make,
get-
una lose.
exactly.
So you're breaking even.
Exactly.
Good
And
stuff.
slowly you can move into profitability, and then now you can move into maxing the profitability.
Yeah.
But you know the bad thing with traders is awananga hiyo plan. Ana hiyo plan ya kufika huko max profitability.
Na hakuna mtu amemshow.
Bas
Yeah,
plan
like,
yake
yeah.
ni, and that's the bad thing about trading. People don't follow like a professional way of learning this thing.
They don't know the professional
Hawajui.
way.
Unaona venye-
They don't- it's not the problem.
Unaenda
hawajui.
medicine school unaambiwa aya sasa unaanza na panya uanzangi na mtu unaanzanga kuchinja panya.
Manze.
Panya frog.
Risk huko na panya ikikufa ni sawa. But umeanza kutrade, you've not even traded,
Una treat the human body.
you're not even
You don't know the
hata-
anatomy.
exactly of the markets. Uja trade bear markets, bull markets, uja trade volatile markets, and then umeanza kuraise do kwa watu haya mnipeni wa trade
Mpedo.
ati ulideliver ngapi the last 3 months impiga 40%.
Bullshit.
Hakuna kitu hapo.
Mm.
Trade
Chukua
for-
risk ya hiyo ya Taras ya 80%. Until the market works in his favor.
Exactly. And it's because like Lawi was saying, most people don't think about risk when they have gained.
Yeah. Kwanza unaisahau.
Let's talk
kabisa.
about the crypto stuff right now.
Forgotten.
It's like the crypto world right now.
Bro,
Exactly.
watu wanadhani kitu ni moto, yani the
Yeah.
hottest shit on
Exactly.
earth.
And then, in a bull market, people think it only goes up.
Yeah.
True.
You get? Like people never think
The swings ahead.
wajui bitcoin inashukanga wanajuanga tu bitcoin ilitoka 10 ikaingia 5 ikaingia hivi ikaingia 1000 to 20000 sasa iko 60 hatuenda wapi so
And then,
but they've
downside.
forgotten from
Hakuna
20 we
downside.
saw a move back down to
To 3.
3000
75%.
exactly.
More than.
More than.
80.
What is the
80%.
chance you'll still be holding your position?
Hey, out.
Everyone has sold.
Even
Kwanza
now,
huyo mwenye wakwenda
markets
juu
fell
tu.
50.
Exactly.
Hey, panic selling. This is a lot of panic selling.
Thank
out,
you.
out. Get me out.
So it's because you don't have a working framework for the markets.
Yeah.
And there's that risk also now going further into
Framework.
markets. Exactly. For a newbie, there's the risk of not understanding risk.
True.
Yeah.
You get?
Very, very big risk.
Exactly. So you've started trading, auelewi hata position sizing, yani sasa the risk is not even ati utaover position size ama utafuata utaacha kufollow rules. Auelewi kwanza hata hii position sizing inafaa kufanywa aje. So you have already failed from the beginning. And I feel like that's something I've also come to learn. Most of the failures that we see in the world don't happen in the field. They fail like Sun Tzu said that in the Art of War.
Preparation.
Exactly.
Every war is won.
In preparation.
Yeah, in preparation.
Exactly. What he basically meant
So,
is,
yeah, that's where victory is.
exactly. What he basically meant is the framework you have when you go into some of these things will determine if you're
The outcome.
exactly. Like if your thinking is flawed in markets, there's no way you're going to make money.
True.
No way.
No way. There's no way,
No
absolutely. No way you're going to bank any money. So the mindset you bring into the markets already determine if you'll succeed or fail. the mindset you bring into starting a business or any
Well,
the framework you have, you get
I
like
get you,
success
I get
is in
you.
the mind.
Mindset.
It's not like
The
a
hustle.
haiko ati
In the
sijui unajua nilingangana ama huyu jamaa akianza framework yake venye ilikuwa alikuwa win. It's very
So
hard when
already
you're in the
won.
battle to change your exactly.
Oh yeah. So you're going to battle, you don't change strategy.
Exactly.
Now.
Yeah.
Stick to it.
You stick to your strategy. So you really have to where you should spend much of your time is in thinking hard about how you're going to approach things.
Yeah.
If you've thought through that well, you're going to succeed. Like I really admire some people who come to the office, like or someone who approaches trading and the first instinct that comes to them is let me reach out to Caleb and ask them, okay, what's the plan or how should I approach this? You've already you're trying to find someone who's good at it
The right
and
way.
finding a mental map, or you don't know anything about something and then you like someone who's decided, okay, let me read a bit about cryptos. I feel like that's if you're that curious, that intellectual curiosity is what leads many people to success.
True.
You get like it starts from it's
Back
not like you're curious, okay, what if I try and do this and this, how will it work?
Yeah.
That's the beginning of success. It's not that now when you're working you're doing and then no. So when you're starting your trading, have a good map that will guide you exactly. You know, I'll start here, and you have something else I've learned is after trading for some time is deliberate practice. Like if you've decided now you're going to start trading, okay, you know the first thing that I need to perfect, and I feel like we did that unconsciously, we were not aware. But I remember the first thing we tried to do when we all started trading was to understand first how markets move. I remember spending a lot of time just doing chart breakdowns, just going
Watching
back,
markets.
exactly, watching markets, trying to understand the ticks, trying to understand opens, close, without trading. We weren't trading at that time. We spent a whole like 6, 7, 8 months perfecting, reading books. That was the first thing we did,
Intense.
right? Exactly. That's the first step that you should take. But if you want to trade and the first thing you're thinking about is opening a live account, ati inafaa nianze na how much?
And how much can I make?
And anaweza make how much?
Wrong question.
Wrong question. Like tell me, okay, where should I start? Start with developing a system, a framework for looking at markets. Is it technical based? Is it fundamentals? How will you? Because I remember we had actually traded a live account. We had already blown some accounts, and then we discovered the psychology. Kumbe game kuna psychology. I remember Lavi sending me the book Trading in the Zone. It's like
Trading in the Zone.
usoma hii book.
Manze.
Ukisoma
Psychology.
Si tulisema baby pips tushafika hapo risk management. Tushaenda kumanage risk.
So if you start reading now you understand Allah. So I really have to change my mindset.
And that book like ilikuwa inakupea brutal attacks.
Exactly, like
Truth.
so if you think hard about it, don't fail from the start. Start with the right framework, the higher chances you'll succeed. Yep.
Oh.
So that's 1. 2, I'll talk now about correlation risks. This is another common thing that I see among very, very many traders, even the professional traders. Okay. So I remember in 2019, I was trading an oil account.
19, okay.
Yeah, I was trading an account and I had some oil positions. And during the weekend, oil gapped about 800 points against me. You get? So I lost about 50% of my account in that trade. That's a risk that I wouldn't think hard about. It's not something that it's a black swan.
That's the time we had the explosion.
Yeah,
At Aramco.
it's a black swan event.
You know Aramco is valued at how much?
I'm not sure.
1.8 trillion.
Yeah, it's the
Trillion.
biggest company.
Private.
Yeah, the biggest private company.
1.8 trillion market cap. Anyway, continue.
Yep. So I had my positions on and I lost 50% of my account.
Yeah.
In 1987, we had a 22% drop in the stock market, right?
That's more
19th.
Black Monday.
It was
Yeah.
Black Monday.
I don't know the day, but I
it's
know
done
in
for
ni-
PTJ. the only
exactly.
bank. Yeah.
If you think hard about all these situations, if you are exposed to markets without thinking hard about correlations, you would lose everything thinking you've risked 1% or 2%.
Sure.
For example, traders come to the office and they're like, okay, which pairs do you trade? I trade Euro Yen, I trade GBP JPY, I trade Euro USD, I trade GBP USD, I trade USD CAD.
Correlation,
You're basically trading the dollar.
basically, yeah. just with different base and
exactly
currencies.
because if you look at these markets well hata setups zitatokeanga tu the same ones
si uongo. If you-
unapata
if
au
they're
si
going up
imebounce
long
kwa
term,
trend line
hii mingine
USD card imebounce kwa descending trend line
just a different pattern.
Exactly,
But
like
long term tunaenda same
the
direction.
same direction so if you're trading markets think about correlations like if you have let's say like for me I think about I had gold oil I've come to try and minimize my trading on oil so I'm focused more on gold now and that's my commodities so I'm looking at commodities so already and I know gold right now is not correlated to the dollar so I know gold moves quite differently to the dollar so I'm trading gold I'm looking at probably a euro yen pair so euro and the yen is not so correlated to gold so that's another pair that I can look at and maybe I can look at GBP AUD and that's the pound against the Australian dollar if I have those three pairs setups won't come in at the same time bad things won't happen at the same time one moving up won't affect the other one moving down so long term if you're trading and I'm talking about long term if you're trading on a day-to-day basis it's hard to experience some of these things but if you'll be trading for 10-15 years you need to think hard about some of these things because there's no way for you to escape like a catastrophic event happening on the dollar happening on some other pairs and what are the chances you'll be in some of these markets or exposed very high so think hard about the pairs you're trading don't trade concentrated pairs mix your pairs have like a mix
Correlation risk.
exactly have a mix of things that you're trading look at markets in a different way and you can do that by just going to TradingView look at the comparison tool compare the correlations you can go to my FX book also the correlations there listed so you can see maybe GBP AUD is 80% correlated to some other market. This market is 80% correlated to this other market. So if you think hard about some of those things, you can be able to come up with very, very good ways of trading the markets.
Yeah.
Yep.
I think we can. Okay, just one last, maybe an important risk form of risk is risk of using a negative expectancy system.
Very good point. Very
So
good
in
point.
trading, people are suffering. Mtu anasuffer ako 10 years in the game, bado anashanga. What is the reason? The main reason is this guy has not formed a system
that has a positive
that
expectancy.
has a positive expectancy. Until you go to your
and they
FX
never
book,
even know.
until you go there and see my
Poor
expectancy is positive. And you know,
Exactly.
and that for that expectancy to become positive, you have to have a profit factor that matches a positive risk reward ratio.
Yeah.
Until those two are not
Align.
matching, your expectancy will be negative, and you'll never see money in trading. Never.
Long term.
Pole
pole tu tende kushuka.
trade. Never. So the main goal in trading,
You're losing in a disciplined way.
you're losing in a and that's good.
If you can change that.
Yeah. So
Because you know the bad thing about losing in a disciplined way is it doesn't get you to think hard about why you're losing. You're just losing
Okay,
3%,
no.
2%, 5%. Una lose tu kidogo. Uko na hope utarudi. Unajua catastrophic event you sit down and
yeah, like
nilifanya
mining oil.
nini?
Ilinisaidia sana. I went back
But
to the drawing
ukiona tu
board.
una lose 1, 2, 3 be very careful.
Yeah. So like for a new trader, and that's why system development it takes time. And that's why trading takes time. Because if someone would if I give you a system in 1 month, because we do have a school, we teach people how to trade,
Yep.
but no one to compare that knowledge amekuwa successful in 2-3 months.
None.
No one. So because that person he has to go through his own process of forming his own system,
Yep.
which will take time.
Yep.
He needs to go and understand now psychology on his own level, risk on his own level, go and now improve reading charts on his own level, backtest his own ideas, you see. So until you have backtested your system, forward tested it, and in a year it has given you a positive alpha. Now that's where, I think that's the point. Now you can even start thinking of marking up your capital, looking for more capital maybe. Now getting into big prop firms, because the prop firms giving up to $1 million, you see. So like capital is there in trading, but the moment you've not formed a system that will allow you to trade big capital, a system that can't go past a negative 8% drawdown, hey my friend, managing $1 billion itakuwa a fallacy to you. Because bro, loss of 5% in $1 billion is not accepted. Yeah, so in
Medallion lost 15.
but so you see
But pulled out.
that was headline, bro.
Pardon?
People pulled out.
That
But he
was
still has
headline news.
money.
I still has. Of
That was
course.
headline news. You remember? Like he was brought to Bloomberg. He talked about it. He said the system was not what.
But Pardon? You said he was brought to Bloomberg?
Like it became a headline.
Okay.
Him
But I
losing
think
that
it became a
15%.
headline because of who he was. He never loses. Like these are people who make money consistently.
But okay, yeah, true. But also,
Especially in bear market as
It's
well.
like I'm a great trader then ni kama kale, hey Ken, umeblow account. It's surprising, you get.
Yeah.
Lakini yeah. Just a normal person blowing an account. Hii ni kawaida yako boss. Endelea tu huko.
So I think it's very important for a trader to first form a good trading system.
Solid.
A solid trading system, a system that knows how to handle drawdowns, a system that knows losing streaks and winning streak.
That's the beginning, I think.
Yeah.
Don't even think hard about trading if you don't have that.
Anzia tu hapo kwa system development tu. Kwanza anza na strategy
What
development.
do you think makes a very good system? Like define to me what makes a good trading system.
Okay, a good trading system has
One with positive expectancy. What would I need to do? Let's say someone is listening and they're thinking hard about, okay, how do I develop this positive expectancy system?
First of all, you need to break down your system into a lot. Like you need to know how many trades does your system offer. Let's say on, because people are different. Kuna swing traders. You need to know my system on average, monthly, quarterly, how many trades does it offer?
Okay.
My system. What is the average risk reward ratio I get on every trade?
Yep.
What is the hit rate of my system in 300 trades in 2 years? What is the hit rate like of me losing and winning? Okay, I've talked about pattern occurrence. There is the risk reward ratio. There is one tab talks about system quality number, which I think until now I don't know mine. So you see, trading takes time. Like it takes time for you to bring all these numbers.
But why would people? I've really thought about that. Why would people want to learn trading first? You're getting a life skill for making money till death. Once you've hacked it, you've developed that system. You're making money till death. It's not easy. So why do you want it to be easy?
See,
to be done in a few months or in a few weeks.
I think it's the law of short-sightedness.
Myopia.
Like
myopia.
we don't have that long-term thinking of
Humans.
My trading will be we have bills to pay on 5th next month.
Nataka trading.
Unaangalia trading at in 20 years. Na landlord ananingoja hapa.
Do you have a 50-year plan?
I have a 20-year plan right now.
Okay. And Caleb, do you have a 50-year plan?
10.
Pardon?
Which adds up to 20.
Pardon?
Not 50, 10.
10.
10 to this decade.
Okay.
This decade.
Okay.
So that's it?
Yeah, that's
I
it.
think
Okay, this was Risk 101.
Yeah, this
Yep,
risk
this is
101.
Risk 101, introducing risk,
introducing
looking at
risk,
different
yeah.
kinds of risk in the markets.
Mhm.
We'll cover Risk 102,
Yeah,
how to mitigate
strategies.
and manage these risks. I think
Mhm.
that's the next thing that we'll look at.
Because outside here, when you ask someone, how do you manage risk? I risk 1% per trade.
That's so basic.
That's so shallow. Like that's a recipe for disaster.
Yeah.
You can lose 1% in 100 trades. That's
Consecutively.
100%. Yeah.
Yep,
So
yep.
I think it was a good show. We had stories inside.
Stories as ishi. Kuna stories more. Plus, the more people will bring, we'll be having a guest again soon, yeah?
Yep.
Yeah. So that's it, Ken?
Yeah, that's
Yeah.
it from my end. I don't
Um,
think I have anything else.
I think that's it. So that's it, guys. Hope you've enjoyed that. That's Risk, as Taras said, 101. We'll go to 108. 110.
Oh, yeah, like the next one is. But yeah, we'll just
Itaenda
talk.
hadi
Yeah,
wapi?
we'll just talk
But
till
anyway.
everyone understands risks.
Anyway, that's it from us. I'm your wonderful co-host, CK, alongside my wonderful co-host, Taras.
Yeah.
And Ken. We like to call him Pops. So we'll see you on the next one. I hope you enjoyed this podcast. We'll have a lot more interesting stuff. For those people who are watching online, shout out to you guys. You guys are giving us massive support, good feedback, and you're enjoying this as much. If you have anything you want to talk about, you can also share with us. Give us ideas, and we'll be able to bring that to you. But that's it from us. See you guys soon. Ease out.
Peace.
Peace.
Yeah.